Good evening and happy Friday. My name is Ryan Shook, Senior Instructor here at VectorVest, and welcome to this week's special presentation titled Read Between the Lines, Hidden Signals of Market Reversals. In tonight's presentation, I will talk about bullish and bearish divergences, explain exactly what these are, what they look like, and how to identify them, not only for market reversals, but you can use this strategy for stocks, industries, and sectors. So without further ado, let's begin. Here's a simple illustration to show you the mechanics of what a bullish or bearish divergence would look like. Now, the top chart would be of the asset. So this could be of the VectorVest composite, a stock, an industry, a sector. Down below, you would have an underlying indicator such as MTI, BSR, RT, or a technical indicator. Could be an oscillator like the DPO or detrended price oscillator. So for the first example, in the bearish divergence, we can see the underlying asset trending higher with a series of higher highs and higher lows. However, down below, you will see the underlying indicator trending lower, going against the trend of the asset. You can see the indicator hitting a series of lower lows and lower highs. This would be a very basic example of a bearish divergence. In a bullish divergence, we could see the asset here trending lower with a series of lower highs and lower lows. However, down here at the bottom, we notice that the underlying indicator here is moving against the grain of the asset itself. It has now pivoted, hitting a new higher low, while the underlying asset reached a new lower low, showing that the indicator below is now going against the grain of the asset, giving us a bullish divergence. Now tonight, I do have some examples for you to better demonstrate how to identify bullish and bearish divergences, as well how the underlying asset, such as the VectorVest composite or an individual stock, can behave after these divergences have been identified. So let's get started with a few examples. All right, for the first example, I have the VectorVest composite or the market timing graph here. We're looking at a time period right now from about September 2024 till November 2024. You can see the red lines I have here. Again, a divergence is when the underlying asset above, which in this case is the VectorVest composite, is going against the indicator below. So we can see the VectorVest composite hitting a series of higher highs and higher lows. The uptrend is confirmed. But if we look at the buy-sell ratio in this example, we can see we're hitting a series of lower highs and lower lows during the same time period. This example of a bearish divergence really became noticeable around here. I do want to mention that just because you see a bullish or bearish divergence doesn't mean that the asset will be changing directions immediately, because in this example, you could see price action hit a high here, but does mean you should have some caution going forward of a potential trend reversal. And if I scoot this up so we can see how the market played out, we can see the rollover starting here in December. And again, the market continued to move further lower. So this bearish divergence here gave investors and traders that utilize this method a heads up that there was underlying weakness in this bull rally, which came to fruition right at the end of the year and going into the beginning of 2025. Now let's take a look at a couple more examples. Now here's an example of a crowd favorite. I know most of you that are watching this have probably bought or purchased, owned NVIDIA at one point in time, or you still might own it. Now, this is a great example here. This was the end of last year. We can see we're looking about November 2024 to about January 2025. Look at the price action of NVIDIA hitting a new high on January 7th at 153.13. Now, in my mind, this gave me some alarm bells because the asset, NVIDIA, hitting a new high, showing that the stock is still in an uptrend. However, down below, we're seeing RT relative timing hit a new low right at the same time period as NVIDIA was hitting a new high, giving us a sense of a bearish divergence. Now, this is a great example of how a divergence can give you some insight and a trend reversal. As I move forward in time here, NVIDIA shortly after went into a descending channel until it hit its low of $86.62 back on April 7th. Now here's a great example of a bullish divergence that occurred last November. You see the stock symbol here, super micro SMCI. I know a lot of investors like buying a dip, but just be careful. You can see it's like catching a falling knife right here after the gap down, price action continuing its trend lower. But I did see some optimism here right at the low, coming in at 17.25 on November 15th. If we notice, look at RSI. You can see here back on November 4th, RSI was at 16.7. And if we go to the most recent swing low at 1888, that's a higher swing low with a series of higher highs, giving us a sense of bullish divergence and giving me a little bit more optimism if I'm going to get into a falling stock. Now, as I move the time cursor forward, we can see a nice little rally to occur right after this bullish divergence, hit a level of resistance here, and a nice quick swing trade to make some profits. So again, bullish and bearish divergence is a very powerful tool to have in your investing arsenal. Now, in this last example, I'm going to let you do a little bit of the work. I'm going to see if you can spot a divergence that is actually occurring as we speak. All right, my last example for this evening. I know a lot of individuals within the VectorVest community that are holding aerospace and defense stocks. Not a bad space to be in by any means. However, I want you to take a moment and tell me what you see here. Can you spot the divergence that is occurring? All right, now let me show you exactly what I'm talking about here. If I use a freehand line, we can see RT starting to slip to the downside, a series of lower highs, lower lows right in here. However, look at price action over the last 2 months. Momentum in the space has brought the sector of aerospace and defense to a new high on July 18th at $110.72. Now, as we've seen with some recent examples here, that does not mean that aerospace and defense can't continue to hit new highs. It's just showing that the underlying indicator, in this case RT relative timing, is showing some weakness in the current uptrend of this sector. So I just wanted to put this on your radar, and I thought it'd be a great example and great learning experience to see if you can spot a divergence on your own. All right, VV Nation, I hope you found this week's special presentation helpful and added a new tool to your arsenal to become a more successful investor and trader. In addition, I hope you enjoyed that last little exercise. Again, half the battle is just training your eyes to identify these bullish and bearish divergences. Now, again, my name is Ryan Shook. If you have any questions on tonight's presentation, please do not hesitate to give support a call. Good night.